Happy Sunday, traders, and welcome back to another video where we get ready for the week ahead. And there's an elephant in the room. Gold broke its all-time highs, which is an incredibly hot topic. And I imagine that traders, analysts, commentators around the world are going to be covering this as we start into the new week. Gold exploded on Friday, went from 2036, which was already, a really big gain recently. It absolutely exploded up to the highs, 2071.88 at the time of recording this, at least according to OANDA. So in terms of where gold goes from here, I want to break this down. I want to get into all of that. But before we do, I just want to show also what I do at the beginning of these videos is I usually take a moment to review my personal trading performance. And I figured it's a pretty good time to do so considering it is, the end of the year. It's the last month. This is my personal trading performance, not this year, but over the entirety of this trading account since March of 2020. I've been trading this account, and you can see I want to show this as I do in many of my videos for the purpose of transparency. Had you only been watching me trade from here until here, you probably would have thought I was a pretty terrible trader. And then again, this year I had a drawdown from late July all the way through to the beginning of November. And then November, I had a really explosive trade on the S&P 500, which really helped to bounce back the account. That and the NASDAQ. So my point with saying that is that, I like to show performance, first of all, from a transparency standpoint, just because I do acknowledge that you guys' time is worth something. And I want you to know that who you're watching has some credibility. By no means am I the world's greatest trader, but I like to show transparency for that purpose, but also to show you what normal returns look like for somebody who's been doing this for 8 years. It is not a straight shot upwards, as you clearly saw in my trading. There are periods where I have very subpar trading before things do well overall. So just a little bit of transparency there to start your Sunday right. Also, as we look at this gold price, I want to say something about this. This is going to be the fourth significant time that we come up to this area. But on a weekly basis, I want to show you guys something that is unique. And some of you can probably already guess where I'm going with this. This is gold over a very long horizon, going all the way back from 2020, where we peaked out. And this was, again, people were afraid the recession was going to hit immediately, which it did, but the Fed basically papered over with printing money. And that fear around printing money and recession caused gold to spike massively. It got up to its all-time high. Then it came back down, then went sideways for a while, and boom, what happened here? Ukraine was invaded by Russia, and the world freaked out again about the sanctions and about the money printing that may need to go into a war. And then what happened over here? Anybody remember? Testing your market historical knowledge here. This was the bank freakouts. Remember in the U.S. where we talked about on the channel at length the ideas that a lot of regional banks and sometimes even significant sized banks were under pressure, and even some collapsed. So there was some fear around the financial system. Now, what's the big crisis that's going on right now? Well, notice something about the price action real quick. Before I uncover what's going on, look at the candle. The candle closed decisively. Did it close decisively here, here, and here? Nope. This is the first time in history that the gold market has closed on a weekly basis at a strong, significant, near the all-time high here. So what's going on right now that's different? I'll tell you what's going on. It does very decisively seem like the Fed is done. And not only that, I made a point on our podcast. I'm a host or a co-host on the Market Insights podcast, which is, you can look up marketpulse.com. I work basically as a commentator there. And so I was on that podcast, and I wanted to make a point about gold that I want to share with you guys here as well. Gold is traveling higher. because interest rates are expected to continue to go down. Okay, if you want to understand really why gold is going up, not oh, it hit support and it bounced. Yeah, sure, well, that's great. And technical analysis, I don't mean to discredit, but the real reason is not that it hit support and it bounced. The real reason that gold is flying high is that interest rates truly look to be done from going higher in the US, which has been a major catalyst for the bears for a long time, that interest rates are going to keep going higher, and that the Fed is going to just keep rate hiking over and over, and it's going to keep gold down forever. Well, that story seems to have played out, and now looks to be the opposite. It looks like interest rates are going down. And it does, in fact, seem like next year they are likely to cut interest rates even. And what does cutting interest rates mean? Well, it means one of two things. They either cut because they have to, which is the bad case, but also very good for gold. We'll talk about that. Either they have to cut rates or they can. Now, fundamentalists, this is a test of your ability. What's the difference here? Because it's huge. And if you're not into fundamentals or you're learning them here, then this might be really educational to you. If they can, let's start optimistic. This is the world is good, everything's fine scenario. They cut rates because they can, because things are cooling off. The economy's hanging in there, and they just see that inflation is cooling, and so they decide they can cut rates, and that allows people, easier access to borrowing money. Companies can borrow money again easier, at lower massive interest, right? Not even massive. Historically, this is about where it's been, but in recent times, it's been much higher than 2018, 2019, where money was essentially free to borrow. But what about this scenario? And by the way, what happens with gold in the can cut rate scenario? Gold goes up. Why? Because the dollar stays pretty weak, and interest rate environments where they're cutting usually are a bullish thing for gold regardless. And I'll get to that point in a second. In this scenario, they have to rate cut. That's also incredibly bullish for gold, because recession fears, remember that word we kept saying earlier, fear is usually what gets gold to rocket to the highs. So if they have to cut rates, meaning things not only slow down, but we enter into a recession due to all of the rate hiking that went on this past few years. If all of that comes to roost and it becomes ugly, right? Economic data is slowing. The debate right now is the economic data slowing going to turn into just a healthy cool, or is it going to relax, cool down the economic data, and then it's actually going to go into recession territory? This scenario and this scenario both are good for gold, and I hope you're following. If this makes sense to you, do me a quick favor and hit that thumbs up button. I'll look at the number of likes after this video goes up to see if people are getting this. But again, there are two scenarios in which gold both look positive, and that's why I think this move is absolutely justified to the highs and could keep going higher. Again, that close on a technical analysis basis looks very strong, and the edge finder also gives us a plus 15 on the edge finder. Look, we've got to take a look at COT data. We haven't even gotten to this just yet. COT data looks incredibly bullish for gold. Same with retail sentiment, seasonal data. The trend is up. Economic data favors gold bullishness. Inflation numbers are cooling. Labor statistics are, cooling. Interest rates are now looking favorable. Gold is in the Goldilocks zone for the edge finder. And this is awesome because it's been bullish recently, but it got more bullish now that it seems to be potentially breaking out through the highs. So does that mean we just go buy gold as soon as the market opens? No. Don't get too excited. Yes, I am bullish here. Obviously, things have really shifted into the bullish camp, in my opinion. But it doesn't mean you just buy gold. You still have to be tactical in your entries and exits, and this is where technical analysis comes in. This red zone is the all-time high. What we're looking for, in my opinion, would be a breakout here and then a pullback, or a pullback into some of these recent zones. It would be natural for price to pull back after hitting an all-time high, and if it does pull back, I think it's a buy, okay? Because I think we are going higher into 2024, and we'll see if I am correct about that. Now, to point out when I was wrong about gold, I was wrong about gold recently. I was actually more on the bearish camp over at this point prior to the whole Middle Eastern conflict flaring up. I did not take any shorts on it, but I figured that, price was likely to continue its downward trend. Why am I pointing this out to you? Because I really dislike when people on YouTube only ever talk about when they're right. So when this thing was dropping off a cliff, there was a really good argument for why that was the case. Inflation seemed to be an unending problem. The Fed rate hikes seemed more likely, and then it changed. Things adjusted. And the point I'm showing you this for is also, some of you might remember I was kind of bearish in this camp, or in this area. I was in the bearish camp at this time. I flipped at some point right around this area to be more on the bullish camp because, again, it seems like interest rates are done, and that is a huge bullish catalyst for gold and why I continue to look for bullish setups. Now, I know I just spent, 10 minutes talking about gold price alone. I do have other setups and such. I want to take a quick look at the smart money tracker and see what's going on. Check this out. Gold. What is going on? So take a look. Gold here. This is the institutional money flow. Down here, we take a look at this data. It shows us the net change week to week, 3% increase. Also, by the way, Dow. Yo, what is going on with Dow? 7.73%. That's a huge increase on the Dow as well. My point with showing you this is that money flow is incredibly important because it shows you where money is going. Big money, not retail money, not small scale money. I'm talking about the biggest and most professional players in the game. What are they buying? What are they selling? By the way, this is their net positioning. You can see gold is still very bullish, but then take a look down here at the money flow. This is where I like to really spend my time when looking at COT data. SPX, bullish. That's great for my position, which I haven't even talked about today. Gold, 3%, huge. Dow, 7.73%. Wonderful, right? So seeing exactly some confirmations in what we've been already bullish on is a wonderful thing. NASDAQ, also bullish, right? And then what about on the flip side? USD, bearish. Boom! This is a big weekly report here. The COT data really confirming some of our biases. Now, again, if you've been watching the DXY with me, you know I've talked about this at length, how, this downward channel, I think it's set to continue. And look at what happened on Friday. We started to see potential rejection. I thought it would squeeze a little bit higher than this. In fact, I mentioned that I'd be potentially looking for shorts if we hit up into the 104 area on the dollar index. And we did not quite get there. But again, that is the bias there. Now, in terms of personal trades, I am still long S&P 500 with an active interest in also getting long the gold market. Now, the S&P 500 trade has clearly just exploded off of the idea that interest rates are coming down. So while I didn't catch gold, my analysis about that topic was correct, and I was able to capture it through buying the S&P 500. So the S&P has just gone and gone and gone and gone. This has been a monster trade for me. I'm in this trade so far for 33 days, which is like 10 times my average holding time for a position. And that's because I trail stops, and occasionally you get a move that just does not want to stop. And so right now, as we continue here, prepping for the new week, my goal is to continue to hold this thing unless we break support. If we break support, I'm out of the trade. And if we continue to put new higher highs, higher lows, I'll just trail and trail and trail until this trade takes me out. And just to brag a little bit more about this, I do also have VOO in my account. So I actually have this open between the two of it. It's open like $30,000, which is a wild number. And I do mean, I'm not actually trying to brag about this because I've pointed out many times where I've been crushed in the markets and also where things have gone really well. Again, if I pull up that chart again, I tried to stay very transparent during this time, just like I had during this time, which was a very painful time, as you can probably imagine. I think I was down publicly in front of the whole world like $65,000. So my point with that is that it's context is key, and I'm not just showing you just my winners. So we'll continue to hold on to this runner as much as I possibly can. And again, between VOO and SPY, this has been a year-changing trade for me, and I'm planning to hold it as long as it wants to run. And again, sometimes people will ask, after a move like this, they'll say, I think I should just take profits or just, get out of the trade because it's gone too far and I don't want to be greedy, right? But this word, greedy, right? In my opinion, greedy is not holding on to a winner. Greedy is taking profits too soon. I make this point because a lot of times, the whole way up on this S&P trade that I've been in, many comments were like, Nick, close out, don't be greedy, close it out. But again, it's taking me everything I can not to close out, right? It's very natural to want to just lock in a profit. But to me, what I think is discipline is forcing, myself to stay to the rules, right? The rules tell me trail stops, let the market tell you when it's time to get out. Don't just get out just because you see a big number, right? Again, this is a very abnormally large number for me, and I don't want to come across saying, oh, I take these kind of trades all the time. But again, it's a big number, and I have to stay true to the plan. It's what got me to this point. It's what will continue to set me up for that. Also, by the way, while we're on the topic, if you guys would like to see the trades being taken by Frank, myself, and Ivan, you can join our VIP group. There will be a link down below in the description to sign up. And if you use the code YTVIP, you can get access to our trading signals for a significant discount off of the price. So again, this S&P 500 trade, also I'm long the pound. I got to talk the pound as well. The S&P 500 trade has been recorded from the very beginning. Traders inside of our group have seen every step of the way, the analysis, the breakouts, the explanations, the trailing stops. If you would like to get those notifications sent to your phone, as soon as I take a trade, I share it within the group with full context. I'm also long the pound USD, which we should talk about. I did trail this one into profit, so let's take a look at pound USD. Yeah, so here is my current position on the pound. Stops are trailed just below this market structure here. And so goal for the pound USD is, again, dollar weakness has been the name of my game here recently. It's been working out very well so far. And if that dollar continues to weaken, the pound probably goes back to the highs. It probably even could break through the highs, at which case I would look to trail stops further. And again, this was a trade we shared inside of Discord as well. So not to plug the Discord too much, but we have been on fire recently between Frank, Ivan, and myself. Ivan caught a lot of yen pairs on both the move up and the move down, which was fantastic. Frank has been trading a lot of indices and gold as well. And of course, I've been on the FX indices side a lot. So with that said, guys, that's going to wrap up the video. But before I go, let me also remind you, you can also get access to the Edge Finder if you want access to our COT data reports, if you want access to our top setups algorithm, which is what got me into, by the way, the S&P trade, the pound trade that I'm in now. It's by no means a magic formula indicator or anything like that, but it can be a wonderful confirmation tool to your existing trading strategies. So for example, let's say I'm looking at oil and oil's getting a bearish reading, right? I can use that information from the Edge Finder to either confirm or potentially keep me out of a trade that I might have taken, right? So I use the Edge Finder every day, and I genuinely, if you're wondering what the Edge Finder is, if you're a newer viewer, the Edge Finder is our software tool that we've built here at A1 Trading. My company is a software company that builds tools for traders, and this is our kind of flagship product. We have been working on this thing for about 1.5 years. There's a team of 10 people behind this software. And so if you're interested in getting a trial or checking it out, trials are very backed up right now. It might take a few days to get to you, or you could just use the promo code if you're pretty familiar with how it works. There's a promo code that will get you, again, a significant discount off of the tool down below in the description, code YTVIP. Write it down somewhere. You get a big discount off the tool or off of our VIP group if that's something you're interested in. Take advantage with that down below in the description. Thank you guys very much for watching, and have a great rest of your day.